Welcome to TradeTheNBA.com. This is John. This report is for the, well, what are we at, the 5th now? Yes. Uh, the war is blooming. Everything is fantastic, though, because despite the uh, appearance that things are going to drag on for quite a while, Iran's going to do their blowing up this, that, and the other, and the existential threat to constant erosion of capital for the West, or at least oil trade, blah 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 blah, is going to continue. You may decimate, a lot of their infrastructure, whatever, but they still have a lot of drones and that, and we'll see if they're able to continue to degrade the ability for them to launch missiles. But as of now, they're just going to continue to wreak havoc, and that creates a significant threat. You already had force majeure from Qatar about the LNG. If that starts to spread, you get a global, squeeze situation, which is inflationary, and it looks as though that's what's built in now. From a S&P standpoint, pretty straightforward here. Above the 50% Morganacci line, which is what right there at about 68.81, you get bullish. We've already got magenta over yellow. You've got literally very little short activity. So the pain trade on this is to the upside if you can break above that. Now, from a DOC reading, we're still in continuation mode of this sideways. We have made lower lows, but we've done it on higher shakeout reading. So you've got all the recipe for a move back to the highs. As odd as that may sound in the middle of a war that's going to be generating higher inflation, but the reality is that inflation rate is going to be modestly contained unless there's some massive change, and that can happen very quickly. Those are the unknowns, and that's the fear factor. And that's what people have to trade against, is that fear, and that's usually an upside push when people are terrified and they either sit on their hands or think that things are going to go to hell in a handbasket. And the problem is you've got all the right mix for positive growth aspects within the U.S. So the timing of this couldn't be any worse from that standpoint, because things were really poised to go pretty well for Trump heading into the midterms. This kind of throws all that up in the air. It really depends on how successful they are. They seem to think that they're going to be. So, that's the gamble, and it's a big one. Don't take light of it. The reality is, if this could go wrong, you bleed out into a longer period of time. The Iranians start destroying, U.S. targets here, there, and whatever, introduce terrorism. The market's going to react significantly and violently to some of those kinds of things, and we'll be watching. I know we just saw a tanker near Kuwait, and that is on fire or whatever, leaking oil into the Gulf. Those kind of disasters can really flip the narrative on things. So we'll keep an eye on it. You can see from an NQ standpoint, the same 50% reality exists there at the 25K level. The problem for it being is, likewise, you have the similar readings of rising magenta. Clear, you already had your revisit of the lows to the zero. It's hard to see there with the wick coming down, but it did that intraday and filled it. So shorts have been satisfied for that. You have difference of DOC where orange is already dipped below MBI red. Your classic buy configuration right there. So that's just going to continue the narrowing of cyan to green, and rise of MBI. DOC red, and you will be not only pushing through that 50%, but heading towards the 100. I know, shock. This is the killer, though, because the longer this remains elevated, worse it gets. It was already bad enough that we were in these levels. Inflation is already going to rise. So now you're not looking at rate cuts, because how can you? And you're going to be looking at rising pressure that's not going to meet the Fed standard, and that's going to ripple through everything. So where there was some relief, that whole affordability argument is going to be resurfacing. So I think that definitely throwing Democrats a big bone here going into midterms. So that's an interesting one, unless things can shift pretty dramatically fast. And we'll see. From a euro standpoint, of course, extreme below the red line. It's not a whole lot of excitement, though. It's still holding up dramatically well, given what a disaster that is. Pretty shocking that they would be able to sustain it as well, which is interesting. It helps S&P 500 companies because the higher the euro, the better they're reporting for overseas earnings. It's just that you know, it's a hard sell case when you look at the output numbers relative to the U.S. to the EU. You know, go figure. From a gold standpoint, of course, after the fade where you have to cover positions in that, of course, it resurged back up. Slightly, it's hard to see there because it's a deep dark red right now at this particular stage, given that it's still a primary sell configuration at this point. But you've got a reset of your shakeout and everything, and you haven't dipped below the red line on that. So any even move down towards 50% is going to find support, and it's going to be rising. Same with Bitcoin that already had a nice move, and you should see a pretty strong resurgence from Bitcoin, given what we're seeing from those readings. It's poised to have a breakout from that state. 50K, you can see after the dip, fully recovered from it, and now you're right back at the previous range peak, and we're in a weakness state at this particular point in the pre-market. But overall, I think everything's been, best you could say, is not just contained, but orderly. From an intraday standpoint, oh, that was there, wasn't that? I got all that indicators popping up there. I adjusted my setup, so I still have some line configuration. Let's look at where we're at. Here's where it is right now. Currently, we had a little bit of a dip. It's been bought back. From yesterday, you can see we had the pump up high, and then from there it just traded sideways, and we were just back and forth for the most part. So there was plenty of room, but it was the early on trades that gave some nice, real quick moves. The short moves on it were a little less exciting on there. But what you saw from where I was at there with these lines is going through the DOC setups with the MBI readings and the differences between them, where you have MBI magenta leading when you have your dip below versus MBI white leading and your expectation for a move to the zeros. So the little differential, so it looks the same from a DOC standpoint, but it's not. They're very different from a value setup. And, those are little important distinctions, but certainly being able to capture the longest move before you get any buy, and that your buys are solid trend moves becomes the most important for the pink bar standpoint. And that's really what we're getting closer to at this particular stage on that. And that'll make it easier because then from a 5K, you're about as tight to the market as you need to be. It makes trading easy on that. But that's the long and the short of it for now. When I get that finalized for trading strategy, I'll be able to show you what the numbers are on it. Should look pretty good. As always, have a good one. Trade well.